Hi and welcome to TCM Education. We are very happy to announce that we are starting a new series. This time a series that hopefully will go for, let's call it infinity. How to make better trade series. In this series we're going to go and do a recap of 3 intraday trades. Obviously after the market is closed, we're going to discuss them in detail, show the entry points, show the risk, show the target, how you can manage. And once YouTube is going to allow us to go on live, we're going to do it obviously live for those who will participate live. Keep in mind, and let's keep it clean, this is all educational content, nothing to do with investment, nothing to do with brokerage fees or anything like that. We are not promoting any brokerage firm, definitely not at this point, and we have nothing to gain other than you guys being here with us, members of our channel, so hopefully taking some classes with us and enjoying and getting better at what you're doing as day traders. Okay, this is the first example. We're going to improve along the way. Keep in mind, all of these examples are under the same criteria, which is we look at stocks that traded at least 5 million shares. They were up more than 5%. 4%. The range was more than 5%. We talked about the range. If anybody has any questions about that, please do it in the comments or to our email. The risk is fixed at 1%, meaning on a $20,000 position, the risk will be $200. If you're going to take, assuming you're going to go live with this at one point after you practice, and you enter a $30,000 position, the risk will be $300. Now, why use this method? It's way clearer, more intuitive, goes exactly to what we as data traders want, meaning printing similar trades with similar risk. It's not reasonable for a trade to be $50 risk and another to be, I don't know, $800 risk. No business works like this. Day trading gives you the ability to adapt and decide, I want to risk a maximum of 1%. It doesn't necessarily mean that the stock is going to lose 1%. Okay, if you're going to be better at what you're doing, you're not going to lose most of your trades. But let's say you lose 10 trades in a row. Okay, 10 positions which are not 100% of your account, you're going to cost you 10%. So if you let's say your account is a US account, you have a $25,000 to $50,000 in your account, let's say $30,000. Each position is $20,000. You lose 10 in a row, you lose all the 1%, that means that you will lose $2,000. If you cannot live with that, then your position should be $10,000. In that case, 1% is only $100 on 10 trades that you lose in a row, which means is, I don't want to say a monkey will do better, but no, let's say it happens, you go into a tilt, we've been there before, you lose, I don't know, 10 in a row. Highly unlikely to happen, maybe, but let's say it happens. So you lose $1,000. Again, it's all flexible decision. This system is very, very scalable. So you're doing well with $10,000, go to $20,000. You do well with $20,000, go to $40,000. Now, what is a $40,000 position in the US equity markets? It's meaningless. Zero when you were talking about a stock that trades 5 million shares per day. Now let's say that the stock trades 10,000 shares per day. Obviously you're the only one that's trading, but this is not the purpose of our mission here. We want to trade alongside institutional traders. Hopefully I won't have to repeat it anymore, because I repeated it so many times. And how do we manage? I mean, there are so many ways to manage a position. You manage 1-to-1, 3-to-1, 5-to-1. You manage time frames. We will only look at 2 scenarios. If your risk is 1%, which is fixed, you have a target of 1.5%, or which I think will be the preferred way to look at this type of trades, you close it at 4 p.m. That's the, oh, sorry, not 4 p.m., 3:59 p.m. Those are the two scenarios, and in between there are dozens of other scenarios. Okay, sometimes positive scenarios, other are negative scenarios. Now some people ask me what happens if the stock is up 1% and then drops 4%. So there are two options here. Either you move the stop loss to the entry, which is something that I suggest we do at 1-to-1. So let's say you bought a $20 stock, it's up 20 cents, that's the 1% risk. You move the stop loss to the entry, and you're basically covered in terms of risk. Worst case scenario, it dives back to the entry, you exit and you lost the commissions. In the US the commissions are zero. In Europe or elsewhere in the world there are some commissions. Let's call them regrettable but meaningless. Okay, that's the strategy. Now if the stock goes up 0.98% and then goes down 1%, and you didn't make it, you didn't post the stop loss to the entry, and it goes down, so you lose the 1%. I mean, that's already the risk that you taken at the beginning. So that's the strategy. I think it's very simple and straightforward. Let's go with some examples. Each example is gonna run anywhere between 10 and 15 minutes, hopefully less, as we practice it along the way. And we're gonna gather a library of many examples. By the time YouTube is gonna allow us to go live, hopefully some of you will have a better grip, or maybe a great grip on the system, will love it and will participate. That's all I can say at this point. Okay, so let's go with this example. Sofi traded more than 5 million shares, and that was on Wednesday, June 18. And they closed the trading day up 6.44%. You can see it clearly in this video. And the closing price was 15.36. Okay, so looking at the chart, where are the entry points and where is the profit taking? Now we have to take into account a couple of scenarios. First of all, who's watching Sofi? I'll have to say 99.99% of traders are not watching Sofi because there are so many stocks. Now the stock does not even open with a gap up. Look how the stock opens. Actually, it opens with a gap down, then moves higher, and then gains momentum and moves higher in this channel. Okay, so what and when are you observing Sofi? Okay, now are you observing Sofi after 3 p.m. or are you observing the stock after 10:30 or 11? Let's go with the decent scenario. So let's say you observe this Sofi before it breaks this high of the day, or at this high of the day, just to make a point, you know. If you observe it here, you already have a trade, assuming it fits your strategy. And again, my strategy is not your strategy, but if you go with this strategy, okay, in this case the entry is 1490. You can see it clearly on the chart. Let me actually highlight it. Hold on a second. This is the entry, 1490. Where's the stop loss? According to our strategy, the stop loss will be 15 cents. 1490 minus 15 cents is 1475. Let's look at 1475. This is the stop loss. Let me post it. Okay. Do you agree with this strategy? Now it's your decision. Do you like it? Do you don't like it? Okay? Do you think it's a lot of risk or lesser risk then you should take the trade? Now let's say you agree with this entry at 1490. Let me draw it at the line again. This is the entry, 1490. Okay, so where is our first target? Let's say 2%. 2% in this case is 30 cents, so 1520 is the first target. Then you move the stop loss to the entry and wait. or you take the profits at this target, which is, like I said, 30 cents up, like I said, 15-20. I think obviously in this scenario where you have a stock that has a lot of volume, a clear uptrend, and takes trades very technically, both options are available. So if you have plenty of other open trades, you don't want to manage this one, you take the profits. Then if you have the patience, you wait until the close. The difference is in this case 1%. Okay, so in this case there is absolutely no risk in the trade. The stock continues higher, closes near the highs of the day, and again, what are additional entry points? Can we find additional entry points? Maybe adding points. You know, to analyze one stock will take us, I don't want to say half an hour, but there are obviously additional entry points. If you are a VWAP observer, maybe you can buy it here at the VWAP area, again, using the VWAP as support. It's not an easy trade, because not because it cannot be done, but it moves very fast. So I would say this adding point, I don't see it as a feasible one. Worst case scenario, you end up with a 30-cent winner. Best case scenario, you gain 30 cents plus 15. How much is it? 45 cents on a risk of 15. That's 3 to 1. 3 to 1 is a very good trade. Okay, 3 to 1. I wish all my trades would be 3 to 1. Keep in mind that there are going to be losing trades along the way. This is actually a very good example to start. Why? A relatively stable stock, not very volatile, a great uptrend, one pullback which came to the VWAP exactly, and you can see it touches the VWAP and the algos are buying it immediately. So that's the proof that this is a good trade long. Why? The algos are buying it exactly as it comes back to the VWAP, and from the VWAP it's up like almost 40 cents. Sorry, 35 cents. So this is the concept. Okay. Now, how many stocks apply to this type of a concept every day? If the market is strong, maybe dozens of stocks will apply to this strategy. I'm looking at the long strategy. If the market is weak, the reverse strategy, where we're looking at short plays, may apply. Now, if the market is flat, it's not doing anything, there will be few stocks moving higher and very few stocks, or relatively few stocks, moving lower. They will be easy to detect though, because while most of 90% of the market, or 95% of the market is doing nothing, there will be standout stocks that are easy to figure out and maybe trade for whatever reason. I don't know why Sofi was relatively strong Wednesday. I don't care, okay? I'm not gonna research that in retrospect, because come Friday, today, there will be dozens of more Sofi. Now, if a stock is up 20%, 30%, 40%, obviously I want to know what happened there. That's something abnormal. If the stock is up only 6%, I don't want to spend my day researching stocks in retrospect. Just doing this analysis of the intraday chart, bringing this scenario into your brain, like where do you enter, what is the risk, where's the VWAP with regard to the entry, how do you manage, okay? If you want to manage, there's a simple management where you take the profits at the end of the day. Then there's a more complex management. You take partial positions, you add, you have different scenarios here. I mean, everybody looking at this chart will have his own input, and that's fine. Okay, guys, 14 minutes. Thank you.